Welcome. You're watching Buy Now, Sell Now. I'm with you, Kavita. With me is my colleague Meryl. And next 1 hour is going to be all about your stock-specific questions. That's right. This is the show where you can get connected with us live. Send across your questions on our WhatsApp number. We'll flash a QR code. Just scan that code and you will be connected to a WhatsApp number. And there you can send across your questions. Write on the name of the stock, the price at which you bought it, and the timeline. We'll accordingly get you a technical or a fundamental take by our experts live. So that's the QR code flashing on the screen. All right, before we go ahead, it's a day where we can see a shuffle in the market. Obviously, the rising crude oil prices, FII selling, weak earnings, and the crude oil obviously crossing 100 barrel per dollar amid West Asia tension is weighing the market down. But what are we looking at? Broad-based selling. FMCG is the only sector that's trying to hold on in green, but then reality emerged as the worst performing sector so far, dropping almost 1.5%, followed by auto, metal, oil and gas, financial services. Banking indices also remain under pressure, with Bank Nifty and private banking declining. The overall sectoral breadth is reflecting a risk-off sentiment across equities. That is what we can see. But yes, we can also see a lot of stock-specific impact due to results on the market. We can see almost three-quarter cuts on the Nifty, and similarly in the 1% down in Bank Nifty. The broader market, mid-cap and small caps, are also following the benchmark. But then let's start talking about stock-specific action, because that is where those are the pockets where you can really make out of this kind of momentum in the market. We are joined by our experts, G. Chokkalingam and Kunal, both in the studio. Hi, good morning. Welcome both of you on the show. Kunal, before I dive into our queries and start connecting with our viewers, a quick market check on the Friday so far.
Yeah, so it's been a tough Friday. Good morning. First of all, it's been a tough Friday for the markets, because given the kind of global handover, various asset classes, whether it's crude oil prices jumping back to that $100 dollars per barrel mark, whether you look at the global indices, specifically the emerging market indices and the Asian indices, which were there in the morning, early morning. So that setup at the start was on the negative side and the somber side for the index. The concern is we've broken below 23,800 mark as a crucial support, and this is after almost like 27 or 28 days of the index remaining into this 500-point grinding range. So now I think we would probably believe that below 23,800 mark, the more the market or the indices trade, there's a higher chance that the index can trade with a slight downward bias. But if you manage to conquer back again 23,800 levels, then the bias becomes a little bit more on the bullish side.
Right. So with that, let's move on now to our stock-specific queries that we've gotten from our viewers. And the first query coming in is from Karthik. He's sent this from Chennai. The stock in focus today is Chennai Petroleum, and his investment horizon is a short-term one. So he's asking for a short-term target on Chennai Petroleum. He's bought about 50 shares of this stock at an entry price of 1,202 rupees. That stock is currently higher than that entry price, so he's sitting on a little bit of a profit. Kunal, tell us your view on this stock.
See, short-term wise, I believe that this 1,300, 1,350 levels for Chennai Petro is a good zone where you can look to consider booking profits. The stock, just over the last, I think, 1 or 2 days, has been trading into this band. You look at it historically also, the last week or the week prior to that, the stock had taken resistance at the 1,300-ish zone, which is the resistance. So I think this 1,300 mark plus is a good zone where you can look to try and take profits. The charts are quite okay on the long-term basis. I was looking at the quarterly charts for Chennai Petro, and the stock has done, I will say, reasonably well. It's been a slightly low beta stock, so just gathers, very slow, steady pace and momentum on the upside. So long-term wise, if you are in case looking to extend your time frame, I think it's a good stock to hold on. Short-term wise, if you're looking at specifically, I think 1,300 to 1,350 is a good point where you can consider booking profits.
Perfect. Let's move on. And this is the question coming in from Mr. PVN Rao. And he wants Darshan on few mid-caps for long-term. Chokkalingam sir, I'll come to you for that, because this is the space which is very exciting, and one can definitely make use of the right valuations. What pockets in the mid-caps are you looking for, not only to recommend Mr. PVN Rao, but also for all the viewers who have money right now and is willing to invest with slightly almost a year's time horizon?
So I can suggest a couple of stocks. To start with, LG Balakrishna Brothers. This is amazing auto component stock, we're trading at around 16 PE. It caters to two-wheeler industry, which is doing very well. And some of the two-wheeler players are expanding the capacity also. The second stock is Bharati Hexacom. It's a telecom business, and I believe the growth prospects for the mobile telecom looks very rosy. And the retail float of this stock is very low, so there is also tactical opportunity for re-rating of the valuation. Third, CDSL. I mean, many people know. I don't have to give a profile, but what excited me most is that every week 6 to 7 lakh new investors are getting on board on BSE platform, and a lot of IPOs are in waiting. Most importantly, the SME IPO. There are estimates of over 6 crore SMEs, MSMEs, and if you see the number of listed players, it's insignificant. So the medium to long-term prospects for CDSL also looks too good. Fourthly, in small cap, Artemis Medicare, it's a hospital company. A lot of activities are happening in the economy, in the market, in the economy in terms of FDI coming into hospital businesses, and a lot of acquisition, consolidation are happening. The valuations are very strong for hospital business, and this belongs to Apollo Tire Group, and they are increasing the capacity to threefold in the next 3-4 years. So if you look at the comparable hospital players and look at Artemis valuation, I think the opportunity is plenty for next 2-3 years. Among all the stocks, only Artemis Medicare we have invested in line with the compliance process.
All right, so LG Balakrishnan, Bharti Hexacom, CDSL and Artemis Medicare are the stocks that Chokalingam sir has flagged for us in the mid-cap space. I'm sure that's going to be helpful for a lot of our viewers. But next up, we've got a WhatsApp query next from Rachel coming in from Delhi. The stock in focus is Polycab, and she's sitting on 4 shares at an entry price of 6,561 rupees. She's asking at what levels can she add more of this stock. So she's looking to average out her buying price. Kunal, what's your view on this stock? Do you think this is a good level to average out?
So it looks like that it's a good zone where you can consider averaging out. But I think a better price point for Polycab, because what happens is there are two things. One is that whether you want an attractive price point for Polycab, or whether you're looking at a point where the stock price ends a corrective phase and starts off at the cusp of a fresh momentum. So it depends on individual to individual. But I think in this case, if you're looking at, say, the end of the current downtrend and then the start of or a fresh inflection point where a fresh uptrend starts off, then I think you need to wait for a closing about 91.50, 9200 levels for Polycab. That could be a potential confirmation zone that we could be looking at a breakout of sorts for the stock and end of this 1.5 odd month of downtrend for Polycab. But since you've already purchased at a far lower price, I would believe that you can continue to hold on your existing quantity. And the second lot, which you're looking to accumulate further, I think either you add above 9200 levels or just wait for another couple of weeks in case the stock drifts down further lower.
All right, that's the advice coming in on Polycab. But with that, it's time for a short break. But post that, we are still answering your stock-specific questions. Keep sending.
Welcome back. You're watching Buy Now, Sell Now with me, Meryl D'Souza and Kavita Thapliyal. And this is the show where we address all of your stock-specific queries. We have on board with us market guests Kunal Bothra and Mr. Chokalingam, who are here to help you out with your stock-specific queries, so keep them coming. The next query that we have is from Prashant, and he's sitting on about 15 shares of Paras Defense, which he bought at an entry price of 350. First of all, congratulations on the profit that you're sitting on. He's also asking if he should sell and book profits, if he should hold or add more at the current levels. He's also expressed belief in the defense sector of India. So I think his fundamentals are quite down. Kunal, can you help us with what he should do at these current levels?
I think you should continue to hold on. I don't see any reason why you should be looking to sell the stock. It's been doing very well for itself. Had a fabulous last quarter where the stock moved from 600 to 1300. There could be a possibility that after that 100% jump literally on the stock price in the previous quarter, there could be a few odd months where the prices may correct. But since your purchase price is lower, I think I would suggest to hold on to the stock. It's also forming a pattern. If you look at it over the last 12 or 13 quarters approximately, the stock has been exhibiting a very similar kind of a pattern where for one quarter, the stock moves up significantly higher. And then subsequently for the next 2 or 3 quarters, the stock goes into a mild correction. Once the correction ends, the stock not just breaks above the previous highs, but then it marches on to make fresh highs as well as go back into big breakout modes on the long-term charts. So that pattern is quite positive. That's why I would believe, since you're a long-term investor, I would suggest to hold on to the stock even at current levels, and assuming if in the next couple of quarters also the stock drifts down a little bit further, continue to hold on.
All right, continue to hold on. Let's move on. And next question is coming in from Krishna. 3 stocks, and he's a long-term investor. Chokalingam sir, I'll come to you. So he wants to hold these counters for almost 1 year. Canara Bank entry price is 141, TCS entry price is 3280, and BSE entry price for year is 4189.
Among these three, I am extremely optimistic on Canara Bank, trading at a very attractive price to book value, and the industry tailwinds are also there. The banking industry credit is growing at 17-18% at a record high level. The quality of asset also improved substantially for Canara Bank over the years. TCS, I would not hold. Maybe tactically 5-10% return is possible, but I think the large IT stocks wealth creation story is over. Tactically, they may give opportunity 10-15% because they are beaten down a lot. BSE, I think it's overly valued. Once NSE gets listed, I think BSE will have more pressure. It will be difficult to justify the kind of valuation. So I would suggest sell on rise BSE.
Okay, that's the take coming in for all these 3 counters. And with that, time for a roundup of the week's key developments from Maharashtra. Welcome back, and you're watching Buy Now, Sell Now, where we are answering your stock-specific question. The number where you can send across your question is flashing on the top of your screen. That's a WhatsApp number, so keep sending us your question. Chokalingam and Kunal Bothra, our guest on the show, are connected. And WhatsApp question coming in from Madhav. His stock is Adani Power, and entry price is 218. He wants a short-term strategy, Kunal.
I would recommend a hold on Adani Power as of now. Short-term wise, it's going through a corrective phase for the last 2 months or so. I think it made a high of around 230 to 40 plus in the recent term, and from there it's corrected 15%. But then, prior to that, the stock had done fabulously well, almost like a 50% jump, in the prior couple of months to this rally towards 240 odd for Adani Power. So I think in that context, it's a stock which looks fairly attractive. Would suggest a hold. If you want to deploy additional capital, I think closer to 202, 205 range could actually be a good price point where you may look to even add or accumulate further.
All right, that's the view on Adani Power. The next query is from Dikshita. She's looking for a view on Infosys. Chokalingam sir, what's your view on this one? I know you've already covered the IT names and TCS, but what's your specific view on Infosys?
Yeah, the result is quite decent only, but I maintain the same stand that large IT stocks will continue to have a problem on the growth front. Very difficult to grow in dollar term more than 2-3%. So, but the stock is beaten down a lot. So therefore, from here, at least 15-20% tactical upside is possible. But as I maintain, the wealth creation story is over for Infosys also. But in the short to medium term, it is quite possible to expect 15-20% return. Based on the severe correction in the stock price and also on the current valuation.
Right, so there is some headroom for growth on a valuations perspective. But Kunal, what's your take on this one?
See, I think after the price correction today, I would believe Infosys could be one of the few stocks which had actually relatively underperformed as compared to the other IT stocks in the recent past. Now, I'll look at this purely as short term because this is a developing story. And the sector also has so many legs, so many news flow which keeps on coming by. So on the charts as of now, I think Infosys looks to be a tad bit more weak. I would suggest that if you're looking to buy Infosys, I would suggest that keep a breakout point of 1100. The moment the stock closes or gives a weekly closing about that 1100 mark, it could probably be a signal of a strong signal of a turnaround for the stock price. Till that time, I think you can just about wait.
Perfect. That's a take on Infosys, but we also have a live viewer connected on the phone line. This is Mr. Dinesh. Hi, good morning, Dinesh. How are you?
Good morning. I'm good. How are you?
Doing good, thank you. You're calling from?
I'm calling from Visakhapatnam.
Visakhapatnam. All right, you can ask your question. Our experts can hear you.
Yeah. So I'm currently holding 15 shares of CarTrade Tech and Venus Remedies. So I've bought CarTrade at 2,800 and Venus Remedies at 1,750. So my investment time horizon is 1 year. I would like to know whether I should hold, buy more or sell.
All right, so for buying more, we'll take the price from Kunal, but Chokulingam sir, CarTrade Tech first.
Yeah, valuation is stretched, and but of course it's a growth story. So I would suggest hold it in case from here 10-15%. If it goes up, then one can sell. Genus Power is a good stock. The industry prospects look good. Stock also corrected a lot. It is good to buy, for the medium to long term.
Kunal, comfortable to buy more, or should that be the strategy in both of these counters?
I think you can continue to just hold on as of now. Maybe I think over the next 2-3 weeks, you might probably get slight better price points for both of these names. They seem to be a decent chart, evolving quite well. They have had a good history, very decent history, of course, in terms of price movement. But maybe I think the timing is a little bit off in terms of the entry. So I would believe that if you're looking to add or accumulate further, just wait for another couple of weeks. Let the entire trade pans out. The market goes into a fantastic sector rotation at every point of time. For the last 2-3 months, you've seen a set of stocks which have outperformed the other peers in the mid-cap, small-cap category. Maybe over the next 2-3 months, if the market goes into the second phase of upside, you might have a differentiated names and sectors which could make a comeback. So in that sense, the earlier ones which have moved up higher, they could go in for a mean reversion or a mean retracement. So buying the stocks at a price point where the stocks come back towards a major mean is a better entry point. I'll suggest a wait as of now, not to add.
All right, so a wait on CarTrade Tech and not an add. The next query that we have is from Shaurya Saxena. He is asking about Bharat Dynamics. His entry price is of 1,500 rupees, and he's asking if he should use this price to hold on or he should sell at this price. Kunal, what's your take?
I'll recommend to hold on the stock as of now. Defense as an overall theme is something which could probably be a major multi-year uptrend. Yes, we've gone through a grind in the last 1.5 odd year for the defense names on the 2024 highs for these names. Bharat Dynamics was a stock which was almost at 2,000 plus, and the stock in the recent price correction had tested 1,100. So it's a decent 40-50% correction the stock has already gone through. I would suggest to hold on to the existing name. And if you're looking to purchase, I would suggest that closer to 1,100 could be a good price point where you may look to accumulate further.
Okay. Mr. Rahul Makwana wants to know on Oracle Finance, entry price is 11,000 and there is a fall in the stock even after good results. He wants to know what should be the strategy going ahead. I'll take a short-term take for him, Kunal.
So after this 9-10% downtick on the weekly chart for Oracle Finance, I would believe that for the first time, I think the stock starts to enter into a slight attractive territory. A major support for OFSS is around 9,000, 9,500 range. So which means, when you look at yesterday's low, for example, the stock made a low of 9,900 approximately. So I think the zone sub the 10,000 mark is actually a slight better price point if you're looking to add or buy Oracle Finance.
All right, that's the take on Oracle Finance. The next query that we've got is actually a phoner, and it's from Mr. Hector. Good morning, we can hear you.
Good morning.
Yes,
Hello.
Very good morning. We've got both of our experts connected. Go ahead and ask a question.
Yeah. Thanks for having me on ET now. Okay, I have 10 stocks of CRISIL at 4630. Can hold for 6 months. Your view on this, please.
Mr. Kunal, what's your take on CRISIL?
I think it's a good stock. You can continue to hold on. The only concern is with a cost price which is slightly on the elevated side. 46.30. The resistance for the stock apparently is at 45.50, 4600 mark for CRISIL, from where we've seen recently the stock trying to take a bit of a turn. If possible, then I would suggest to average out the stock at slight lower levels, maybe closer to 4180, 4200 is a good zone where you can consider averaging out. So it will help you in two fronts. One is to bring your cost price or your average net cost price slightly on the lower side. And the second is that when the stock comes back, and even if it retraces back towards, say, 4600 levels, the net number for you would still be on the positive side since your time frame is on the short-term basis.
Ram from Chennai is holding Auroville and the price is 171. Kunal, 6 months view. What would you recommend?
I don't track the stock, so I'll probably skip this one.
Chokalingam sir, would you like to go?
IOL Chemical, one can hold. Recently, there is some improvement in the margin. One can hold the stock.
All right. Next stock is Jubilant Foodwork. This is the query coming in from Satya. Acquired at an entry price of 440, looking to average now. So what price on a short to medium term, Kunal?
See, I think, frankly, this is one of the few stocks which has been a big mystery because over the last 4 years or 5 years, 2021 highs, Jubilant Food has been consistently falling, or at least, showing signs of a major lower highs and lower lows on the monthly and the quarterly charts. In 2021, for example, the stock made a high of 900, fell down to 400, rallied back towards 750 approximately, and now back to that 400 levels. So that's a bigger concern. We may consider that 400 could be a good zone where the stock is taking support, but I would need maybe another few weeks to pan out. If the stock assumingly doesn't break below this 400 mark, then we can attribute that this is a good zone where you may consider averaging out. But in case if it falls below the 400 levels, it could probably open up a major downtrend for the stock going into the next maybe 4 or 5 quarters. So it's a very touch and go scenario for Jubilant Food. As of now, wait and watch, but let the next couple of weeks pan out and keep this 400 mark, as I indicated, as a major price point support, and then watch the price action over the next few weeks.
Okay, next question is from Mr. Parthanand, and 2 stocks, HG Infra and Imagica. I don't know the investment horizon, but entry price in HG Infra is 712, Imagica is 87. Kunal, if it's a shorter term view, what would you recommend?
See, I think HG Infra and Imagica, both of them have been a stock which have been grinding lower and have been constantly falling. I think HG Infra has fallen more than 50% in the last 1.5 to 2 years. And Imagica also, I think the last, say, 1 year or so, has fallen from those 85, 90 levels to 45, 46 approximately, where it's trading right now. I don't see any reason why I think you should be looking to buy these names. I think it's a very good time of the market where you should start building up your longer term portfolio, larger cap names. Look at Reliance, HDFC Bank, the PSU banking majors, etc. There are so many stocks which are available at a decent discount for themselves, where there is a strong solidity on the long-term basis. So I would suggest that it's better that you start shifting your capital from these kind of names towards the formidable large cap stocks.
Right. Next up, we've got Mohit from Ludhiana asking for a fundamental take on ICICI Prudential Life. Mr. Chokalingam, what's your take?
One can hold it for medium to long term because perennially is a growth story. Of course, in the recent quarter, there is a lot of volatility in the performance for some of these life insurance or general insurance companies. But certainly, it's a good stock for medium to long term.
Okay, Rajiv Kashyap over here wants to know about Vari Energy. 2875 is the buy price, holding it for about a year, and wants to know if can be averaged at this current level, and he's looking for a 3 months take on it. Kunal.
I would not suggest an averaging out. I think the stock has been constantly falling for the last 3 odd months from 3,400 towards 2,700 mark. Stocks which are slightly high beta, when they fall on a very gradual basis, that tells you that maybe the last pain is still not out for the stock. And I think that anticipation, I would not suggest an averaging out.
All right. That's on Vari Energies. We're now joined by a caller, Mr. Reddy, coming in from Hyderabad. Mr. Reddy, you're connected?
Yes, madam. I am on the line.
Very good morning, sir. Our viewers are
good morning,
also connected. Madam. Go ahead and ask your question, please.
Hello?
Yes, sir, we can hear you very well.
I
We can
am
hear you on our
100
side.
shares of Vedanta Aluminium and Vedanta also. So I want to invest 50,000 each share further. Whether it is okay for 2 years period.
That's the query coming in for a 2-year period. He's asking if he should buy Vedanta Aluminium. He's already holding Vedanta as well as another spin-off stock. Mr. Chokalingam, what's your take on Vedanta Aluminium?
One can hold it. Aluminum industry prospect looks too good in the short, medium to long term. But for fresh investment, I would consider stocks like ITC and HDFC Life. Considering the short-term perspective of the market, the oil has crossed $100 Brent oil in future market, which is a cause of major worry. So in the short term, it is better to be a little conservative, and metal space doesn't give that kind of comfort in such time. So therefore, I prefer ITC and HDFC Life.
All right, Mr. Chokalingam, could you also suggest what other stocks he could look at? He's got 50,000 worth of capital to deploy. Do you perhaps have other names which are better placed?
I am overly bullish on CDSL. I personally do not own the stock. I think there is a massive structural change happening in the capital market, which would favor CDSL. That looks, from both short to long term, quite attractive.
All right, understood. Kunal, what's your take? Do you think there are other investment avenues for him to consider with this 50,000 worth of capital?
Yeah, quite a few. I would probably recommend, say, something like Tata Motors CV could be a good bet at current levels of 400. CDSL, I think, as Mr. Chokalingam was also indicating, I think that's a very good chart developing at 1300 levels, good price point. ABB is something which you can consider at the current price zone. That's something which I think starts to look a little bit more attractive, specifically given the kind of pedigree of price uptrend. And then if I have to add maybe one more stock which could be considered as a slight high beta, BHEL also, I think, at close to this 385-400 zone is a good price point where you may consider to look to accumulate from a long-term perspective.
All right. Well, I hope all the questions were answered, but let's move on. And that's the last question of the day coming in from Subrata Mukherjee from Kolkata. Wants to buy Zentech for short to medium term. And what should be the buy price? Kunal, I'll come to you for that. It's a medium term outlook.
So if you're looking to buy specifically this name, I think it's come back towards a good price support. 1700, 1750 has been a support for Zentech over the last, 10 days, 15 days approximately. And that seems to be a good price point where you may consider to accumulate. But on the higher side, the resistance seems to be falling for the stock. The earlier resistance was 2000 and the more recent one is closer to 1850 levels. So you'll have to be a little bit more cautious on the kind of quantity which you're looking to purchase. But I believe that 1700-ish could be a good zone where you can look to buy with a near-term target range of maybe 1800, 1850 mark.
All right, that's the take on Zentech as well. And that was our last query for the day. Thank you so much to both of our guests, Kunal and Mr. Chokalingam. Thank you so much for joining in and giving us all of your expert opinions. With that, viewers, we'll slip into a very short break, but stay tuned to Buy Now, Sell Now and ET Now for more market updates coming your way.
Welcome back. You're watching Buy Now, Sell Now, and we have more updates. In fact, more stock-specific updates. But before that, let's just get you a quick market check where definitely we can look at few pharma counters doing well. Let's just get you a list of top Nifty 50 gainers and losers. What we can see so far, the one that are topping the market are Cipla, almost 2.5% up, HDFC Life, almost 0.5% up, Reliance, ITC, Trent, and HCL Tech leading the gain so far. But on the Nifty, the choppy ones that we can see going down, Bajaj Finance down more than 3%, Eternal down almost 3%. All right, we'll talk more about this, but let's shift focus to Infosys. Infosys has tapped in 30-year company veteran Ashish Kumar Dash as the next CEO who will take over from Salil Parekh once his term comes to an end in April. Dash currently serves as Executive Vice President and Global Head of Services, Energy and Sustainability, among other verticals. He has expressed excitement about leading the company through one of the most transformative periods in the technology industry. Our colleague Darshita joins in with more details. Darshita.
Right. Infosys has officially announced the beginning of its next leadership chapter with the appointment of Ashish Kumar Dash as the CEO designate. He will take over the company as the Managing Director and CEO on the 1st of April 2027. Now, reacting to the announcement, Dash said he is honored by the confidence that the board has placed in him and is excited for the opportunity to lead the Infosys into the next phase of growth. He also has highlighted that technology is entering a new era with artificial intelligence fundamentally reshaping how businesses operate and create value. According to him, AI is no longer just another technology trend. It is transforming the way the companies innovate, improve the productivity, and serve their customers. Dash has also outlined his vision for Infosys, saying his priority will be to build the company's strong foundation while accelerating the innovation, expanding its capabilities, and helping the clients succeed in the increasing AI-driven world. He has also added that he looks forward to shape the next chapter of Infosys' journey and create enduring value for all the stakeholders, including customers, employees, shareholders, and the partners of the firm. The message clearly signals that under the new leadership, Infosys intends to place AI and innovation at the center of its long-term growth strategy as the company prepares for the next phase of the digital transformation in this AI era.
That's the take coming in on Infosys. Thank you so much, Darshita, for that view. But we've also got Mr. Shrikant Velamakarni, co-founder and group CEO of Fractal Analytics. He was here to speak to us. Thank you, sir, for joining in. Tell us about the EBIT margin in the first quarter. EBIT margin dropped nearly 490 basis points on a quarter-on-quarter basis. PAT as well was seen falling about 38% despite the revenue growth that you've clocked. What drove the sequential margin compression, and do you expect it to persist going ahead?
See, first of all, our margins are usually the highest in the fourth quarter, the lowest in the first quarter, and they gradually go up to the fourth quarter. This has happened historically every single year. So the best way to look at margins is to look at year over year. And our adjusted EBITDA has gone up from 15 to 17%, 2-point improvement. Our gross margins are up 29 basis points. So every single margin number has actually improved over the last year. So on a year-over-year basis. So that's the best way to look at it. That's while sequentially, yes, they are down. That is sort of expected because usually we hire a lot in the first quarter. We have salary increases, etc. And over the year, we bring our margins back up to the usual level. So this is really a year-over-year trend. And best is to look at the year-over-year numbers in terms of profitability. And every single profitability number has improved year-over-year.
Mm-hmm. All right. Both Americas and Europe grew over 24% year on year. What is driving this growth, and is it durable?
Number one, Europe grew by 25%, US grew by 24%. And we expect that given the explosion in demand for AI, we expect that this industry has phenomenal growth prospects. Yes, our overall growth has been 20%, and that's because some of the pressures that we have seen in TMT. But if you see sectorally or geographically, there's opportunities everywhere. Because AI can fundamentally address several needs that are being addressed typically by IT services or business process outsourcing or business process management or management consulting, all of these industries are now being disrupted with AI. And therefore, AI's total addressable market is expanding in such a way that it's creating this opportunity for us to grow in every industry across every geography at a pretty significant clip. Overall growth rate for us has been 20%, but we expect that that number is more because of our execution, not because of our demand. We can grow faster, and we should be going faster as we get our execution into play.
Also, tell us about excluding the TMT business, which grew at 35%. What exactly is causing this drag, and when do you expect stabilization or recovery over here?
First of all, I will take responsibility that our TMT execution has been less than stellar. And instead of blaming the sector or blaming clients, I think we should take responsibility that we haven't executed well. TMT as a sector is still growing. We should be growing there, though we are not. So it is our execution, and we are making some changes in order to improve our overall execution in TMT. Having said that, let's also look at what's happening within TMT. TMT industry has significantly increased its AI capex. So because they're putting more, buying more chips, building more data centers, building capacity for AI explosion, because of which their AI investments are going up quite substantially from a capex standpoint. But from an OPEX standpoint, it's putting pressure because they have eventually, a pot of money, and they're spending a lot more of that on AI capex. So there is pressure in reducing the AI OPEX. And part of that is playing out in the way our opportunities have, some of them went away, or because of which our overall revenues have gone down. Eventually, we think that the massive opportunity, TMT is one of the largest industries for AI, and we should be able to recover that growth. But for now, we've had a bad growth. Now, this growth is bottoming out. So we expect that the next quarter, we would have a sequential growth in TMT.
What is Cogentic's current revenue contribution and its expected trajectory this year?
So Cogentic is our agentic AI platform. And think of it this way, that when companies are beginning to transform their business, transform their workflows with AI, they need to build a knowledge and an ontological layer on top of their data, and then take each business process and reimagine that. So what Cogentic does as a platform is to help companies think of building those agents that work with enterprise tools that access the enterprise data, and they solve complex business problems. And the platform enables that. On top of that, we are building specified products to tackle each industry opportunity. For example, Cogentic Underwriting helps you solve underwriting problems using AI. Cogentic for e-commerce helps you grow e-commerce revenue. We are seeing growth in each of these as we go forward. Now, Cogentic pipeline for the year, we have disclosed today, it's about 4 million. And we expect that Cogentic as a fraction of the overall revenue will keep going up. Overall, if you see, the license revenue portion of our business is 3%, and we expect that number to keep inching up and go up to almost as high as 20% over the next 3 years.
All right, Mr. Srikanth, you're investing over 6% of revenue in AI R&D, and you're also highlighting a data sovereignty demand. So where do you see the biggest AI-led growth opportunity for the rest of FY27?
The biggest opportunity for AI is to help companies reimagine their workforce, as well as their processes with AI. That is a big demand. Now, one of the considerations for companies adopting AI is also to make sure that the AI that they use is trustable, meaning that it will not be stopped by anybody at any point of time. And secondly, that it is giving me the desired outcome. I wanted something, how aligned is my AI to that? Which means that we have to solve some fundamental problems, including providing model optionality in the way the clients solve their problems. So that's one. Secondly, we have to build that knowledge layer on top of the data. So this is where we're seeing the big opportunity with AI. As AI becomes more trusted, it'll get more adopted. As it gets more adopted, we'll see more value and more value unlock, which again leads to more demand expansion. That's really the virtuous cycle of AI expansion.
All right. How are expanding deal sizes reflecting in the order pipeline and large deal wins? And what is the outlook for sequential margin recovery and full year FY27 growth?
Clearly seeing more RFPs, more deals with larger expectations, greater ambition, and therefore greater deal size as well. They are already reflecting in our pipeline, but we expect that as Fractal becomes larger, becomes more visible, continues to improve its track record, it expands the overall pipeline that's available to us. And we are clearly seeing some signs of that. We just are announcing one of the largest deals that we've ever struck, working with a healthcare payer in helping them reimagine their AI foundations in order to grow their business faster. So that is something that we are beginning to see across the board, that the deal sizes are going up and we're getting opportunities to play in a much larger space.
All right. Thank you, Mr. Srikanth, for all of that. And thank you for joining us today on ET Now. With that, viewers, it's a wrap on this edition of Buy Now, Sell Now. But stay tuned. We've got a lot more market updates coming to you on the other side of this break.